Good morning, Bhakti, Chetan. Is my audio and video clear? Okay. Good morning, Kiran. Okay. ठीक है. A very good morning to everyone who's watching this video. I am Manat Sharma from Olive Board and I'm here with the live mint analysis that we do every Monday, Wednesday and Friday. So every Monday, Wednesday and Friday we take up the live mint analysis. Okay. So this is important for all regulatory exams, whether it's RBI, NABARD, SEBI. Okay. Just a second. Give me 1 second. Yes. So if you want to download this YouTube class PDF, you can do it from the Olive Board app. Just go to the courses section and there's going to be a separate folder of YouTube class PDFs. You can download this class PDF from there. Okay. Good morning, Atithi, Rahul. Very good morning to all of you. Let's begin. The first important news is PSB's power ahead of private peers in war on bad loans. That means here we are talking about public sector banks and private sector banks. Okay, public sector banks and private sector banks and the amount of bad loans that they have. Okay, the amount of bad loans that they have, non-performing assets that they have, we're talking about this over here. So public sector banks, they have shown a significant decline in bad loans. Because as compared to the private sector banks, public sector banks have seen that there has been a decline in the bad loans. We're talking about non-performing assets during financial year 25, outperforming the private sector banks. Okay, so in private sector banks, NPAs increased, but in the public sector banks, NPAs decrease. Now, I have a question for you. What do you mean by non-performing assets? What is the meaning of non-performing assets? NPAs. Who is going to tell me the meaning of NPAs and what is the time frame when is it called an NPA? When is an asset called an NPA? Let me see who's going to tell me. You might have heard other certain terms like substandard asset also, and a substandard asset, then doubtful asset, then loss asset. These terms you might have heard, right? So tell me, what is an NPA? More than 90 days NPA, okay. Yes, Romil Chetan, 90 days after due date, okay. Atithi, right. Substandard, less than equal to 12 months, okay, right. Right, Chetan. So basically what happens is when a bank gives a loan. So when a bank gives loan to someone, and when a bank gives loan to say A, there's always a risk attached to it that whether this bank will receive that loan back or not. There's always a risk attached. If in case, if in case that person A, for example, on 1st June 2024, A had taken up a loan and the due date for giving back the loan along with the principal and the interest was 1st June 2025. Okay? But this person is not able to pay back the loan, the principal amount as well and the interest also by 1st June 2025. Okay? So 1 year has passed, not able to give. Now after 90 days, that is 3 months. Even after 3 months of the due date, if that person is not able to pay back the loan, that will be considered as a non-performing asset. Okay? Non-performing asset. Because what happens is when bank provides a loan to someone, bank has to we have the principal along with interest back. That means it becomes an asset for the bank. But when this asset does not perform for about 90 days, when you do not get that money back for about 90 days from the due date, that will be considered as a non-performing asset. Achha, if this timeline is extended and till 12 months, it's almost about to be a year, it's about to be 364 days, and still you have not received any your money back, that will be considered as a substandard asset. If for more than 12 months till about say 3 years, till about 3 years you do not receive that money back, it will be considered as a doubtful asset, the same asset. And if it has passed more than 3 years, more than 3 years have been passed and still you have not received the money back, then we consider as a loss asset. So this I have revised the static portion with it, with all of you, so that you can remember this. This is a very easy thing, but yet at the same time, it is forgetful also. You can forget it also very easily. Okay? That is why you have to revise it time and again. Whenever there is a news, something like that, just revise it. Okay? This is what is called a bad loan. So doubtful more than 12 months. Yes, Chetan, right. Rahul says 3 months assets that won't bring the expected revenue. Okay. Okay. I hope you understood. So, a non-performing asset, substandard asset, uh, doubtful asset, and loss asset. Okay, I hope this is clear. Now, PSB's, the news here is PSB's bad loans dropped by 16% year on year to 2.84 trillion rupees in financial year 25. Private banks saw 2.9% increase in bad loans. Okay, reaching 1.29 trillion rupees. Data, now this data, we took up 19 private banks and 12 public sector banks to calculate this data. The decline in public sector banks NPAs is due to healthy recoveries and few slippages, and private banks struggled with rising stress in unsecured debt. So the major reason why private banks saw non-performing assets was they were providing credit without any security, unsecured credit. Okay? I hope this is clear. So which sector showed a 16% year-on-year decline in bad loans in financial year 25? Private banks, foreign banks, public sector banks, cooperative banks. What do you think is what is the correct answer? Absolutely correct. Public sector banks. Okay? Next. Now, before we see the news after this, let me see if you have read the newspaper on your own or not. So this, like, you can consider it like a bonus question, so that you can see whether you have read the newspaper on your own, whether you know this on your own or not. Which Indian company signed a memorandum of understanding (MOU) with Norway's Kongsberg to build India's first polar research vessel? So there was a small article, okay, that we are about to build the first polar research vessel. Okay, first polar research vessel. So there's a memorandum of understanding which has been signed between two companies. Okay, so what is it? GRSC, okay, Chetan B. Yes, yes, absolutely correct. Garden Reach Shipbuilders and Engineers Limited. Very good, all of you. You are reading the newspaper, and that is great. Great. So, this is a small news on the side of your Mint newspaper that India to build first polar research vessel with Norway's help. So, India and Norway are going to build up the first polar research vessel. Kolkata based, this is a Kolkata based GRSE, Garden Reach Shipbuilders and Engineers Limited, and Norway based Kongsberg, they signed a memorandum of understanding in Oslo on Tuesday. Very good, all. Great. Okay. Next, new mission taking shape to tackle India's cotton crisis. So here we are talking about National Cotton Productivity Mission. National Cotton Productivity Mission. Giving you a homework before we consider, see this in detail. I'm giving you a homework that please read about this mission in detail. This is your homework. Okay. So what is this article about? So the government of India is launching this National Cotton Productivity Mission to improve the productivity of cotton so that we can revive the struggling cotton economy. So we are going to focus on improving yields. We are going to focus on introducing new seed varieties, crop diversification, mechanized farming, especially across 11 key cotton producing states. So another homework that I'm giving you, which are the major cotton producing states in India? Major cotton producing states in India. You have to see which are the major cotton producing states. Okay? Cotton yield in financial year 25 is estimated 465 kg per hectare, which is very, which is far below China's 2170 kg per hectare. India's cotton output dropped from 33.7 million, bales in financial year 23 to 30.7 million bales in financial year 25. And which is the largest producer of cotton? It is China with 32 million bales. The 5-year mission. So this is a 5-year mission. National Cotton Productivity Mission is a 5-year mission. We have to double the yields from 465 to 1000 kg per hectare. Okay, this is the target. Strategies include crop diversification, mechanized farming, new seed development. We've seen this. Okay. So what is the key objective of India's upcoming National Cotton Productivity Mission? To increase cotton exports to China, to reduce cotton prices in domestic market, to double the cotton yield and improve farming methods, to replace cotton with jute as the main crop. What is the answer? What is the answer to this question? Quickly give me the answer, all of you. Key objective of India's upcoming National Cotton Productivity Mission. Please do this mission in detail. Okay, do the details of it. It will be important from exam point of view. Right. So to double cotton yield and improve farming methods. Okay, next. Tourism to double to 42 trillion rupees by 2035 on domestic demand. So basically what happened was that our tourism industry, it saw an all-time low because of the COVID-19 pandemic. We know the tourism industry was doing really bad because of COVID-19. But now if we talk about today's scenario, the tourism industry has again revived, and that is what we're talking about here, that it might double to 42 trillion rupees by financial year 35. Okay? Yes, all of you, C was the correct answer. Very. Okay? So, according to this World Travel and Tourism Council, India's tourism sector is projected to double and contribute 42 trillion rupees, and it is also going to contribute 64 million jobs to the economy by 2035. So very important data for descriptive answer writing also, for descriptive answer writing also. So by 2035 we are saying that we are going to double, contribute 42 trillion rupees and 64 million jobs to the economy. Domestic travel is expected to be the main growth driver. So we're talking about domestic travel here, supported by increased infrastructure, destination marketing. Okay? If we talk about 2024, tourism contributed 21 trillion rupees, and now we are saying we might double it by 2035. And this is currently 6.6% of the GDP. So it is good amount of contribution, right? International visitor spending reached 3.1 trillion rupees in 2024. Domestic travel accounted for 15.5 trillion spending. Okay? So according to WTTC, how much is the Indian tourism sector projected to contribute to the Indian economy by 2035? 21 trillion rupees, 15.5 trillion, 64 trillion or 42 trillion. What is the correct answer? What is the correct answer? Yes, 42 trillion rupees. India boosts Pharma PLI to cut reliance on Chinese imports. See, we are heavily reliant on China for drugs also. Okay? You might have heard about API, KSM. Have you heard about this? Anyone? Have you heard about API, KSMs? We had, done this before also. Active pharmaceutical ingredients. I had explained you before also. Or you can say key starting materials. Key starting materials for KSM. Any idea, anyone? What are these? See, active pharmaceutical ingredients or key starting materials, these are the active components. The active components in any kind of medicine, any kind of drug. So whenever you go to a doctor and that doctor gives you a medicine, there is that medicine will have many things inside. Many drugs inside one medicine. And I'll say for headache also, for nausea also and all. But which is the main ingredient in that? Main component of that medicine, that is what is called API, active pharmaceutical ingredient. Okay, so for example, PCM has been given to you. So PCM is for many things, cold also, for body ache also, but majorly it is for what? Major usme what is the drug present in that? That is what is called your active pharmaceutical ingredient. Okay, so now Indian government, it has upgraded its PLI incentive scheme. So PLI scheme, production linked incentive scheme for pharmaceuticals, so that we can reduce the dependence on China for raw materials, especially bulk drugs and drug intermediates. Okay, and it includes boosting support for domestic manufacturing of APIs, KSM, and drug intermediaries. Currently, currently we are importing from China, and we want to reduce these imports as of now. ठीक है, it will cover more molecules including KSMs, drug intermediaries, API. If we talk about imports, India imports 80% of its bulk drug requirements, and that's mostly from China. 80% is a lot. ठीक है, it stood at $3.5 billion bulk drug imports. API sector contributes 35% to the pharma market, and that is why we're talking about domestic manufacturing. We should focus on local production of antibiotics, antifungals, chronic disease medicines. That is why we have brought in this scheme. So, what is the main goal of India's updated Pharma PLI scheme? To increase pharma exports to the US, to reduce import dependence on China for drug ingredients, to increase foreign investments in Indian pharma, to privatize the pharmaceutical sector. What is the answer? Yes, to reduce import dependence on China for drug ingredients. Okay? The economy is gaining strength, and so is the urgency of reforms. Okay, so this article, again, this such kind of articles, these viewpoints are important from descriptive answer point of view. Okay, so India's economic growth remains strong. We've seen that India is the fastest growing economy as of now. Even though there's global uncertainty because of construction services, government investment, there is global uncertainty, but India's economic growth is led by construction services and government investment. But there are still concerns that there might be weak consumption demand, job creation might not be that much, global trade risks are also there, and that is why there is a need for deep structural reforms in the economy. Okay, India's GDP growth in Q4 financial year 25 was 7.4% and full year growth 6.5%. Investment growth rose to 10.4%. Construction grew 9.4%. Services 7.2%. Though manufacturing lagged a bit, 4.5%. So we need to focus on manufacturing sector. Exports, especially services, for 423 billion rupees, continue to support growth. Job creation, private consumption, global trade protectionism, these are the major risks. And RBI is also expected to further reduce the interest rates and bring in further repo rate cut. Okay, so India, what is the long-term focus that this article is talking about? That we need to focus on investment in infrastructure so that we can become a high-income economy by 2047. So, what is a key challenge India must address to sustain long-term economic growth? Rising oil imports, decline in services sector exports, weak private consumption and job creation, overspending in infrastructure. What is the answer? What is the answer to this question? challenge. We talk about challenge that India must address to sustain long-term economic growth. Right. Weak private consumption and job creation. Now, this is a very important article, very important article to understand. Okay, here we are going to understand some one two key economic concepts also. So, top rated Indian companies ditch banks for bonds. So, you can see the headline: top rated Indian companies ditch banks for bonds. What is this article saying now? So, Indian firms, they are opting for bond market instead of traditional bank loans. So, in order to raise money, what are the banks doing? Rather than taking loans from the banks, these companies, they are raising money by issuing bonds. Now, what is a bond? Bond is like a long term debt instrument. ठीक है, long term का एक debt, it's like a debt instrument. Suppose for example on this paper it has been written that this is a bond. You get a fixed yield at the end. You know, once you have brought a bond, है ना, you get a fixed yield out of it. ठीक है, interest rate is paid on this bond. For example, if I'm a company, I am issuing a bond. That means I am giving bond, ठीक है, to person A, and I'm taking money from that person. And at the end of the term, after the maturity, I will provide some interest, which is called yield. ठीक है. Now, what firms are doing, rather than taking loans from the banks, है ना, if you take loans from banks, it will lead to credit growth, it will lead to credit creation, and overall the financial system will work well. But when most of the firms, they start shifting towards the bond market and they start issuing the bonds to raise money, then these traditional loans, this credit creation is hampered. Okay, this is a challenge for banks because they are seeing subdued corporate credit growth. They're not able to see that credit growth only. Okay, so if we talk about in April 2025, alone companies raised around 91,000 crores via private bond placements, which is a lot. There's a huge shift towards the bond market. Corporate bond yields have fallen faster than bank lending rates. Okay, what is the reason? What is the reason behind why people are shifting towards bond? Because because the bond yield is declining. Bond yield is declining. What does this mean? When bond yield declines, matlab now the corporate banks, they can issue bonds at a lower rate of interest. That means if they issue bond, if they provide bond to the people, okay, they will have to pay less amount of rate of interest. Rather than taking it from a bank, what do? Is they issue the bonds. So the reason why these banks, why the people, these corporates are taking up issuing money from the bond is because of the declining, falling yields. अब यहाँ पे there is a confusion. Most students have this confusion कि falling yields तो मतलब कि falling yields मतलब their profit is reducing and all. So no, ठीक है. This confusion needs to be clear that when bond yields fall, ठीक है, when bond yields fall, then these companies, what does this mean? That the companies now can issue bonds by providing less rate of interest. अब जहां पे they'll have to give less rate of interest, those only they'll issue. That is why we are seeing this shift. That is why we are seeing this shift in this thing. Okay, so that they do not have to pay ज़्यादा rate of interest, so they are issuing money from the bond market. So triple A rated corporate bonds became more attractive than bank loans due to lower costs, because issuing bonds is a lower cost for them. ठीक है. Banks are witnessing slower credit growth in the corporate segment despite rate cuts. Even though they are reducing the rate cuts, still they are seeing a low growth. ठीक है. हाँ, yes, customer का profit reduce होगा, not of issuer. Exactly, अदिति. Increase in bond prices, right? ठीक है, yes, Chetan. ठीक है. So what is going to happen is bond yield, when it is going to fall for the corporate, and for the corporate it is going to be very good. For a corporate, for a firm, it is very good. But for the person who is going to issue that, who is going to buy that bond, buyer of the bond, that person will have a problem. The profit will reduce of this person, the interest that this person will receive will reduce. Okay. So why are top rated Indian companies increasingly turning to bond market instead of bank loans? Banks have increased interest rates. Bonds now offer higher yields than bank deposits. RBI mandated private banks to issue bonds. Falling bond yields and surplus liquidity make bonds cheaper than loans. See, here the economic concept that I was talking about is the negative relationship between bond yield and the rate of interest. There's a negative relationship between bonds and rate of interest, bond prices and rate of interest. Okay? This negative relationship that this is what I was talking about. See, if bond yields fall, and people will prefer, the issuers are going to prefer buying this, but the buyers are going to prefer taking, keeping their money in the banks at the rate of interest. Because that negative relationship you need to understand. Yes, so falling bond yields and surplus liquidity make bonds cheaper than loans. Absolutely correct. Okay? Then there is this data, there is this survey which had been conducted. The headline here you can see is mobile ownership eludes rural women. Again, this is also very important from descriptive point of view. This is going to help us in focusing on digital inclusion, whether digital inclusion is actually happening or not, whether digitization is actually happening or not. Okay? Whether there are gender gaps, inequalities or not. So यहाँ पे there is a government survey which highlights that there is a major gap between mobile phone usage and ownership among rural women in India, which shows that usage is more than ownership of mobile phones among rural women here. So while more than 75% use mobile phones, only 48.4% actually own them. So 75% use mobile phones, but only 48.4% of them have their own mobile phone. That means there is limited access to these mobile phones. Only 48.4% of rural women own a mobile phone. Gaps are particularly wide in states like West Bengal, UP, and Assam. So we can see this gap in West Bengal, UP, Assam. Younger rural women aged 15 to 29, they use phones more than the older ones, but ownership is still much lower than men. Just 30% of rural women can perform online transactions. 89% of them use UPI. Schemes like UPI have helped reduce access barriers, but still device ownership is a major problem. So according to 2025 Telecom Ministry survey, so this was a survey done by Telecom Ministry, what percentage of rural women aged 15 and above own a mobile phone? We're talking about ownership here. 76.3%, 91.4%, 48.4%, or 57.6%. What is the answer? Right, 48.4% is the correct answer. Absolutely correct. Okay? Capital outflow tariffs may hit CAD, which is your current account deficit. Current account deficit. Now, whenever you read about balance of payments, there's a major chapter in your ESI, है ना? So when you talk about balance of payments, we divide it into current account, majorly two accounts, current account and capital, and you can say financial account also, majorly, right? We divide it into two parts. Current account is related to the recurring transactions that happen on almost a daily basis, which do not affect the asset and liability situation, the assets and liability position of a country. These are recurring nature. These are recurring in nature. On the other hand, we have capital and financial account. Capital and financial account, which focuses on assets and liabilities, and like borrowing and all, है ना? Borrowing and capital investment and all, that is capital, or you can say financial account, FDI, FII, all this is a part of your capital and financial account. We are talking about this deficit over here. Current account deficit here, you can say goods and services related deficit we are talking about here. Goods and services related deficit here. And deficit means when your imports are greater than exports. Imports are greater than exports. So we are talking about current account deficit here. So whenever you see such an article, just quickly revise it from your static portion. This इसी तरह से you have to revise it. ठीक है? What are the components under current account? What are the components under capital account? These things you should be knowing. ठीक है? So India's current account deficit, it is expected to widen in this fourth quarter. Why? Due to rising capital outflows, falling remittances, global uncertainties. ठीक है? Remittances, are falling, capital outflows are happening, global uncertainties are there. New US tariffs reduce foreign investment inflows. They may further, worsen the, current account deficit. ठीक है? So current account deficit for October to December financial year 25 stood at $11.5 billion, 1.1% of GDP. ठीक है? Then goods trade deficit in April hit 26.42 billion. Current account deficit may rise due to lower remittances, US tariff proposals, bond yields in the US surged, making Indian bonds less attractive. India saw net capital outflows of 1.53 trillion. US proposed 5% excise duty on outward remittances. Okay, so this is going to impact our deficit. So what was India's current account deficit in October to December quarter of financial year 25? $11.5 billion, $17.8 billion, $10.4 billion, or $6.7 billion. What is the answer? What is the answer to this question? India's current account deficit in October to December quarter of financial year 25. You see here, stood at 11.5 billion, which is 1.1% of GDP. Okay, so the answer is A, $11.5 billion, not B. Okay, see here. Okay, $11.5 billion, up from $10.4 billion in the previous quarter. Okay, again we have the PMI data here, Purchasing Managers Index, but this is for the services sector, Purchasing Managers Index. So purchasing managers index, like I've already explained you many times, purchasing managers index, we take up a survey, we bring in a survey of major industrialists, and we ask them what is the business sentiment. Okay, what is the business sentiment? So if the value is more than 50, then it is related to expansion. If it is less than 50, we're talking about contraction. Okay? So this you should be known. So India services sector output rose to a 3-month high. This is as per SHBC, India Services PMI by S&P Global. This growth was driven by strong export demand and increased hiring by companies. So strong export demand, increased hiring by companies. So it rose to 58.8 in May from 58.7. Okay, its highest level ever recorded in the survey. This is because of strong international demand also. India's GDP grew by 6.5% in financial year 25 with 7.4% growth in Jan to March quarter. RBI projects 6.5% GDP growth in financial year 26 as well. Okay? But manufacturing PMI, yes, in the previous class only we saw manufacturing PMI also, which fell to a 3-month low in of 57.6. So manufacturing sector में we saw a low, but services sector में we saw a 3-month high. Manufacturing में 3-month low. ठीक है? So what was the value of India's services PMI in May 2025 according to the HSBC survey? 58.7, 58.5, 58.8 or 59.0. What is it? For May 2025. Atithi is saying A, Chetan is saying C, Bhakti C, Rahul C, and C is the correct answer. So 58.7 was in the previous PMI. ठीक है तिथि, it increased to 58.8 in May. So it was 58.7 in April, 58.8 in May. Okay. So now again we have, according to Moody's, India's must spend big to hit net zero. We are net zero carbon emissions target has to be met by which year? Who's going to tell me? We have pledged that net zero carbon emissions, we are going to reach net zero carbon emissions by which year? Which year? Yes, Chetan Atithi, by 2070. ठीक है, by 2070. Yes, Chetan Atithi Rahul, absolutely correct. So according to Moody's ratings, India must invest around 2% of its real GDP annually in the power sector over the next decade if you want to achieve this 2070 net zero carbon emissions target. So 2% of real GDP in what? In the power sector. ठीक है, country must balance energy security, affordability, energy transition during this process. ठीक है, India needs to invest 2% of real GDP. Such kind of statements you can use in your answers. ठीक है, renewable energy sector is expected to add 450 gigawatt of clean energy over the next decade. Coal-based power generation is also projected to increase by 32 to 35% in order to meet the electricity demands. Moody's emphasizes the trilemma of energy security, affordability, and transition. So there are three things that we need to focus on, and there is a trilemma. Okay, we need to focus on energy security also because of rising energy needs. Okay, climate change is happening, energy needs have increased. So we need to focus on energy security also. But we need to also focus on affordability. It should be affordable for everyone. And the third thing is transition. How to do all these three things together is a challenge. Transitioning to clean energy, affordability of energy, and we want to transition, but it takes time in transitioning. Yeah, and because there is a rising demand for energy, so we need to focus on energy security also. India has committed that by 2070 we are going to reach the net zero goal. I know we made this goal at COP26, Conference of Parties, or 26 in 2021. Okay, and Moody's expects that private and government-owned companies should play an active role in this renewable energy push. So, according to Moody's, how much of its real GDP must India invest annually to the power sector to achieve the 2070 net zero goal? 1%, 2%, 3%, or 4%? What is the answer? What is the answer to this question? Yes, 2% is the correct answer. So 2% should be invested in the power sector annually. Okay? Right. Yes, AI is coming for our jobs. It's the old story of new technology. Now, this article is very important. Now, what we are seeing is nowadays, we are seeing that because of AI, because of artificial intelligence, we are seeing that a lot of jobs will be lost. You know, a lot of jobs will be lost. There's going to be unemployment, huge amounts of unemployment. And this is what we are seeing. Now, this article is saying that if we go back to the times when computers were made, when technology had actually started, we started bringing in technology when computers were introduced. Then also there was a huge hype that this is going to take away jobs. There were strikes and all from people, people's side, and this is going to take away our jobs and all. But this was actually overhyped. This is what they are saying. This was actually overhyped. Yes, some jobs will be lost, but some jobs will be created also. It's not just that all jobs will be lost. Some jobs will be lost, but some jobs will be created only, right? So the catch is that we need to adapt to these to such kind of changes. Okay, the crux is that we need to adapt to such changes because changes will happen. Change is inevitable. Change is inevitable. Okay, We need to adapt to such changes, and that is what is going to help us in our survival of the fittest, that changes are going to happen. You cannot stop changes from happening, but what you can do is you can adapt to it. So what they're saying is, yes, AI will take away some jobs, but then there are going to be some jobs which will be created also. Yes, Chetan, exactly. Some jobs will be created also. So this thing, this is an old story that AI is coming for our jobs. This is an old story that we do, bring in this negative sentiment that it is going to take away our jobs. It will take away some jobs, but it will also create more jobs. So you need to keep upskilling, reskilling yourselves. Right, right. Survival of the fittest, exactly. Okay. So while AI may displace some jobs, this article says while AI may displace some jobs, the earlier technological innovations also did. है ना? But it would also create new categories of employment, just like before. With every increased level of technology, improvement in the technological innovation, there's always going to be some loss of jobs and some creation of jobs. Okay, so there are historical patterns that there's going to be there are fears of mass unemployment due to technology, but these are mostly exaggerated. बढ़ा चढ़ा के बता रहे हैं. This is mostly exaggerated. This does not actually happen in reality. ठीक है, estimates are that 40 to 50% of white collar jobs may be lost to AI. Historical examples like computerization of Indian banking in 1980s showed similar panning, but overall employment grew. Because if you see the old scenario, so we are saying that unemployment is going to reach all-time high. There's a fear that AI is going to take up our jobs. But if you see the entire the old scenario, if we talk about 1980s, May the banking system was computerized. So there was this problem, there was this panic that now to there's going to be mass unemployment in the banking sector, but that actually did not happen. There was an overall increase in employment. In fact, okay, so opposite happened. So because this then automation in 19th century U.S. textile industry eliminated 98% of labor, but Demand for workers didn't fall because of lower labor costs. Technologies like Zomato, Swiggy, Uber, they created entirely new job categories. So it's like, the demand for workers is going to be. They might, maybe displaced from one area, but there might be new jobs in the other area. Okay? The term Luddites, there's this word Luddites, which originated in the 19th century English workers who destroyed machinery fearing job loss. But job loss actually did not happen in the net sense. In the net sense, it did not happen. If somewhere you are having loss of job, then somewhere else you are getting that job. So there was this word Luddites used when in during the 19th century the English workers, they destroyed the machinery because there was fear that there's going to be job loss, but the job loss actually did not happen. Okay. And if we talk about the present scenario, jobs in AI, cybersecurity, customer analytics, large IT systems, they are on the rise. If we talk about the current scenario, okay, AI is posing a threat. AI may jobs, they are taking away jobs. But alternatively, jobs are there in cybersecurity, customer analytics, IT systems, and all. Okay, artificial intelligence is there, but we need different kind of jobs for that case also. So, according to this article, what is a likely long term impact of AI on employment? Long term impact of AI on employment. AI will eliminate most forms of employment permanently. AI will only affect blue collar jobs, not white collar jobs. AI may displace some jobs but also create new ones. AI will stop technological progress entirely. Such kind of articles, ka data, such kind of material you can utilize in your answers also, because AI is related. You will get a question, no doubt, because AI is a it's a hot topic, you can say. Plus last year also in 2024 AI related there was question AI in banking sector only. This was a question, है ना? Use of AI in banking sector. So in that kind of question, such an example could have been written that this is overhyped. Okay, so yes, AI may displace some jobs but also create new ones. C is the correct answer. Okay. Center to revamp prescription drug list to restrict misuse. Now we talked about antimicrobial resistance. Antimicrobial resistance. In one of the classes we talked about antimicrobial resistance. What is this? What is the meaning of antimicrobial resistance? We saw that there is a rise in antimicrobial resistance. What is antimicrobial? What is AMR? Antimicrobial resistance. We have discussed this before. Who's going to tell me? Anyone? See, whenever you take an antibiotic, just a second, huh? So whenever you take an antibiotic, okay. So whenever you take an antibiotic, it is to take out the toxins from the body, है ना, for for the bacteria to to remove that bacteria from the body. So we take up antibiotics. For example, you have cold, you have any kind of viral infection, any bacterial infection, so you take up antibiotics to kill that bacteria in your body, है ना. It's an antibody, it kills the bacteria, the virus in your body. ठीक है. Now what happens is, in India we can see that there is a rise in use of antibiotics for prevention purposes. We're using these antibiotics for preventing a disease from happening. So when you take a lot of antibiotics, what happens is your body detects these antibodies, it detects, and it starts resisting the effect of these medicines. You might have heard that अब इस मेडिसिन का मुझे कोई फर्क ही नहीं पड़ रहा है, मैंने इतनी मेडिसिन खा ली है कि अब मुझे ये फर्क ही नहीं पड़ता, आई नीड सम स्ट्रॉन्गर डोज. एंड यू माइट हैव हर्ड अबाउट दिस. दैट्स बिकॉज कि आपने इतनी ज्यादा यू टेकन दैट मेडिसिन सो मच, यू ईटन दैट मेडिसिन सो मच that now your body knows, it has detected कि अच्छा ये body ये this medicine will like, this is not harmful for the body, it's okay, let it be. तो इसका असर ही नहीं होता फिर. So you have to move on to stronger medications. ठीक है, that is what is called antimicrobial resistance, when these antibodies are not affecting your body only, आपको फर्क ही नहीं पड़ रहा. That's because increasing use of antibiotics. Resistance built by microbes in the body due to overuse of antibiotics. Exactly. जब microbes get so strong and intelligent कि they become resistant to antimicrobes. Exactly. आपने इतनी ज्यादा खा लिया कि अब आपकी बॉडी को पता चल गया. Now you are not able to feel that medicine. That medicine is not working on you. That is what is called antimicrobial resistance. And that is why DCGI, Drugs Controller General of India, it is going to revamp the list of medicines under Schedule H of the Drugs and Cosmetic Rules. Now, what is this Schedule H? You can see here Schedule H. It includes drugs that cannot be purchased or sold on retail without a doctor's prescription. So, under these rules, drug and cosmetic rules of 1945, there is this Schedule H. So in the exam they can ask you directly what is Schedule H related to of the drugs and cosmetic rules 1945. So here is a list of medicines written where at retail, wherein the chemist shop, in the chemist cannot give you that medicine without a prescription from the doctor. So what is this? What is this article saying? What is this news saying? That we are going to revamp this list. We are going to make changes in this list so that we can curb the irrational use of antibiotics and rising antimicrobial resistance. This will include newly launched drugs as well. This is going to enforce stricter retail sale regulations also. ठीक है? So Schedule H drugs, they require doctor's prescription for retail use. Retail sale, we've seen this. So the revamp is prompted by increased self medication, because what we do is rather than going to a doctor, चलो ये खा लेते हैं कोल्ड ठीक हो जाएगा, है ना, we'll be fine. तो उसमें we start building up antimicrobial resistance in that case. Antibiotics are being misused, which is leading to antimicrobial resistance. Over 536 drugs are currently listed under Schedule H. So currently how many drugs? 536 drugs. Drugs like remdesivir, your dexamethasone, favipiravir, ivermectin, and mebrofenin, they may be added to the list. So these might also be added. A high-level expert committee was formed in 2022 to review and align this drug regime with the global best practices. Okay? So what is the primary aim of revamping Schedule H by the center? What is the reason? What is the aim? to restrict irrational use of drugs and curb antimicrobial resistance, to promote the use of over-the-counter antibiotics, to reduce the prices of essential medicines, to boost pharmaceutical exports. What is the answer? What is the answer? Exactly, to restrict irrational use of drugs and curb antimicrobial resistance. ठीक है? So that is all from my side. These were the important articles I wanted to discuss with you. I hope you are also reading the newspaper. Please read the newspaper on your own also. So before you attend this class, try to read the newspaper on your own. See the highlights of the newspaper, whether you are able to see the important articles, whether you are able to segregate what to read, what not to read. है ना? So read it on your own also. This is going to increase your vocabulary also. It is going to help in English also. It is going to help in essay writing. It is going to overall shape up your personality and it is going to really help you in your interview also. Okay? Okay, I hope this is clear. Thank you so much, Chetan. Great. Bond and loan wala article, such kind of articles are, very important. Bond wala hai na, you have to understand the relationship between bond and rate of interest. There is a negative relationship. ठीक है, जब when bond yield, when bond yield starts falling, है ना, यानी कि अब जो corporates हैं they are going to issue bonds. लेकिन bond yield जब fall होता है, then the borrowers they move towards the bank's rate of interest, है ना. इस type का negative relationship, these kind of relationship is very important to understand. ठीक है. Thank you so much, everyone. That is all from my side. For those of you who want to connect with me beyond these sessions, just connect with me on Telegram. This is my Telegram handle. ठीक है. अच्छा, there is an article in the Hindu today on IBC. ठीक है. I will send it in the Telegram group. I will check it out and send it in the Telegram group. Okay, Rahul. You can also send it if you want. Telegram group पे you can send it. ठीक है. Chalo. Thank you so much, everyone. Have a nice day and I will see you in my next class. Take care and keep studying. Bye bye.